Have you ever done your taxes, looked at that final number, and just had that sinking feeling? Where you wonder where a huge chunk of your money actually went? Well, today we're going to dig into some source material that breaks down the real tax burden on a typical middle-class family. Let's follow the money. The source material we're looking at kicks things off with this absolute gut punch of a statement. It really captures that feeling, right? Sitting there, looking at your pay stubs, and realizing that more than half of your income seems to have just vanished. This is really the jumping off point for this whole explainer. So, to make this real, the source asks us to picture a family bringing in a household income of $110,000 a year. This is our baseline, our starting point. Think of it as the whole pie before anyone, and I mean anyone, takes a slice. And here it is again, 56%. This is the total slice that the source claims gets taken from that $110,000 income. The big question is, how? How is that even possible? Well, that's exactly what we're about to break down. The source actually calls this whole process a year of siphons. It's a pretty vivid way to put it, right? So we're going to follow the money for this family over a typical year and see exactly how that $110K gets whittled down piece by piece. Okay, so here's our starting point. A full, untouched $110,000 in gross income. It's the whole shebang. Now, let's watch what happens. The very first siphon hits before you even get your paycheck. We're talking about FICA taxes. That's for Social Security and Medicare. It's mandatory, it comes right off the top for every wage earner, and just like that, a chunk of your income is gone. Next up, the big one, federal income tax. For most middle-class families, this is the largest single deduction they'll see all year. It funds everything from roads to national defense, and it carves out another huge portion of that original income. But wait, there's more. We can't forget about state income tax. Now, this depends on where you live, of course, but it's another layer that funds things like schools and state troopers. And you guessed it, it reduces that take-home pay even further. Now, here's where the source's argument gets really interesting. It includes other things that it calls mandatory costs in the total burden. We're talking about health insurance premiums, which often come right out of your paycheck, and property taxes, which homeowners have to pay. The source argues these basically function as another part of that overall siphon, leaving you with a much, much smaller piece of the original pie. So we've seen all these individual siphons take their cut throughout the year. Now it's time to add it all up and see what the full picture really looks like, at least according to this analysis. And there you have it. When you put together the FICA taxes, federal and state income taxes, and then you add in those other required costs the source mentioned, like property taxes and health premiums, you land right back at that 56% figure. This is what the source calls the effective total burden. Okay, so seeing that 56% number is pretty eye-opening, but the source material takes a really sharp turn right here to ask a bigger question. It sets up what it calls a tale of two very, very different tax realities. So, is this 56% burden something that everyone shoulders equally? That's the exact question the source poses, and it leads us right to the core of its entire argument, which it calls the Great Contrast. And boom, here is the source's central claim, laid out plain as day. On one side, you have our middle-class family with that 56% effective rate. And on the other, the source contrasts it with what it calls the true tax rate for billionaires, which it calculates at just 3.4%. The difference is just staggering. Just so we're all clear, true tax rate is the specific term the source uses for this comparison. It's not your typical income tax rate. It's calculated a little differently, usually by comparing the taxes someone pays to the growth in their total wealth, not just the income they report. So, how on earth can a gap that big even exist? Well, the source offers up an explanation. It argues this isn't some accident, but the result of a very deliberate, long-term shift in how we do taxes in this country. According to the source, the story pretty much unfolds in 3 acts. First, it claims that way back when, tax rates on corporate profits were much, much higher. Then, over decades, the tax code started to change, and those changes began to favor income from capital, things like investments, over income from wages. And what was the result? Well, step 3. The main job of funding the government slowly but surely shifted onto the shoulders of everyday wage earners. And the source really sums up its entire point with this direct quote. This is the central idea, that the tax system was basically re-engineered over time through a bunch of quiet changes, and that led to the huge contrast we just saw. And all of this leaves us with one final, pretty heavy question to think about. Based on the arguments we've just looked at from this source, what is the real long-term cost of a tax structure like this? For the middle class, for the economy, and for society as a whole? That's a question worth chewing on.